In the late 80s, we had a savings and loan crisis, essentially a banking crisis. And in 2008, what did we get? A banking crisis. Those come after weak dollar periods.
Hello, Steve. Hello, Joe. On Question Time, we talk a lot about the dollar, a lot of different aspects. And I think we all agree that since the election in November, we've seen the dollar go up, a lot of it based on expectations of tariffs. But it looks now like things are beginning to pull back a little bit. Joe, is that what you're seeing?
Well, yeah, and I think a part of that is because of maybe those expectations for tariffs were too, I don't know, too strong, I guess is the right word. I'm not sure what the right word is. Um, it's very interesting since last week was really Trump's first week as president, and I think we got some surprising commentary from him, some surprising events. Uh, and actually, I think it was the week before where he said something about putting 25% tariffs on Mexico and Canada on February 1st. Or maybe that was the first day of his after he came in on inauguration day. I'm not sure exactly when it was, but it was recently. And then he said something about and 10% tariffs on China. And I thought to myself, did he get his numbers mixed up? I thought we were really mad at China. Aren't Mexico, or at least Canada, aren't Canadians the good guys, or at least some of the good guys? I'm not sure what's going on there. So I think that's a little confusing for the market. They're not sure exactly what to expect here. I'll put it this way. I don't think anybody in the market expects that he's going to put 25% tariffs, really going to put 25% tariffs and leave them there on Mexico and Canada because it has a huge impact on our economy. We are very integrated in North America, particularly in automobile manufacturing, but some other things too. Very integrated. A lot of pipelines that run Canada, U.S., and so forth. So I don't think anybody really believes that he's going to put those tariffs on and leave them there. And so, and actually, my guess is what we're going to get. And by the way, February 1st is Saturday. So I said in the weekend update that, maybe this is the last week where you can have that little bubble where you think that he's not really going to do this, because we don't know what Mr. Trump is going to do or President Trump is going to do. We never do. And so it's funny, I think that his deadline ends on a Saturday when the market's not going to be open. But my guess is he's going to say we're imposing these 25% tariffs, but we won't actually put them on, or we're announcing these 25% tariffs, but we're not actually putting them on for 2 weeks or something like that, and put a new deadline out there, and then they'll negotiate something and come up with some announcement a couple of weeks from now. That's my guess, and I think that's what a lot of people are guessing, though, which makes me uncomfortable with it. As you guys know, I hate being in the crowd. Um, but the thing with China I thought was odd too. It's like he campaigned on 60% tariffs and suddenly it was 10. And I'm not sure exactly why, except maybe it's mixed up with this TikTok thing. I don't know. Nobody knows. Point is that I think that people are kind of grasping here that maybe he is using these as negotiating tools, and that there's not going to be these tariffs that are going to stay on. I don't know the right answer, but I can tell you that the dollar has pulled back a little bit, a couple of percent last week, and it's down a little bit today too. We had a little flare up on trade over the weekend, and this is the kind of thing we've been talking about, man. This is what Trump does, man. Nobody knows what's going to happen next. And so there was this big, well, not big, but a little blow up with Colombia over the weekend. And by the way, they misspelled it in the press release, which I thought was funny. I live in South Carolina. Our capital is Columbia, South Carolina. It's Columbia, but the country's Ombia. But somebody at the White House need to get their dictionary out. Maybe their atlas. I'm not sure, because they spelled it with a U. But anyway, this thing about the deportation flights and whether it should be military planes, and I don't know. Colombia got upset, and Trump's response was exactly what everybody should expect with everything, because Trump's universal tool is the tariff. And so he said, well, we'll put 25% tariffs on Colombia if they don't take these people, and if they don't do it in another 2 weeks, we'll go to 50 and blah, blah, blah. So in a sense, he's imposing an embargo on Colombia, saying you take these people on our terms, or you're going to get tariffed. Well, they came up with some solution, and I think it was typical. I think of all diplomatic solutions where both sides claim victory. So, and I don't know. I would say, by the way, just to be really clear, we've been doing deportation flights to Colombia throughout the Biden administration and during the previous Trump administration, and we didn't have these kind of blowups. And there, I think, is maybe a clue too about why I think the dollar is going to go down more eventually. The dollar currency values are not just about economics; they're about politics too, geopolitics, the location of politics, if you want to think of it that way. And I think that the more people, more countries that we alienate, the less likely they are to want to hold dollars. And it's at the margin. It doesn't matter all that much, I don't suppose, because dollars are needed whether they want them or not. But it does change the attitude about our country. And so I think we need to be careful, or President Trump needs to be careful about how bullying he is with some of the other countries, whether it's Canada or Mexico or Denmark. I think I don't know what's that old saying about you catch more flies with honey than vinegar. I think that we probably ought to be diplomatic, a little more diplomatic, put it that way. Of course, that's not his style, so I don't know if we're going to get it, but it does have an impact on these things. So we'll see how that goes. But in general, look, right now the dollar is at the top of the range that it's been in for a long time. It did break out of the range initially on this election, and it came back down. It's right at the top of the range now. And I'll tell you something else too. We do think the dollar is very, very important to how you adjust your portfolio. If you're in a falling dollar environment, there are certain things that are going to perform well. You know what they're going to be. It's going to be gold. It's going to be commodities. It's going to be foreign stocks. We know what happens there. In a rising dollar environment, we can see bad things too, but in general, we want to invest in countries with strong currencies. That's in general. We have seen in the past, and I think we're seeing a little bit of it now. In the late 90s, for instance, when Robert Rubin talked strong dollar, every time the man got in front of a microphone, he said the word strong dollar. And he usually said it 3 or 4 or 5 times before he got off of the microphone. One of the consequences is that we attracted a ton of capital to the United States, and we got a bubble. We got the dot-com bubble. They kept attracting money, capital into the United States, and it got to a point where they didn't have anything to invest in except pets.com. So that's where they put it. And so we ended up with a bubble. And by the way, there's more bubbles out there because of those kinds of things. It's kind of interesting with strong currencies than there are with weak currencies sometimes, particularly in emerging markets. But now we're getting kind of the same thing. The dollar's been strong really for quite a while now, since 2015, 16. And I think it's just become this thing where you want your capital to be in the US, you want your capital to be in the US. And there's only so much that we can absorb from the rest of the world before you inflate prices here. And whether it's the price of, I don't know, it could be the price of real estate if foreigners are coming here and buying real estate. It could be stocks and bonds, which is kind of where it's gone this time. And it's just that's one of the consequences and one of the things that happens when you have floating rate currencies, put it that way. And so we pay a lot of attention to that. We think it's going to go lower, and we don't know exactly what the trigger will be to really knock it down. My guess is it will be something out of the administration. They have talked openly about wanting a weaker dollar. Of course, it's a bit of a contradiction, right? At the same time, they've talked about wanting a weaker currency. They've also talked about and threatened, actually, some countries are saying you better keep using the dollar. So I'm not sure how you square that circle of wanting a strong dollar and a weak dollar at the same time. I'm not sure you can get both. My guess is when tariffs don't change the trade deficit figure, the next place they'll go is we need a cheaper dollar, because the tariffs are not going to change the trade picture. We know that. So it's going to be interesting to see how that plays out, but it's not going to play out next week. It's going to take time. Meantime, that's where we are.
So, Steve, I think we all agree, and Joe said it, the dollar is hugely overpriced at this point. What are some of the big things that would be impacted, um, even if we get more of a pullback, but for a while, what effect is it going to have on the markets and on the economy?
Sure. Well, in terms of putting a number at that, we put out a research note. Actually, it was Joe's note, pegging it around 20% overvalued. I mean, you can pull up a chart, DXY, look at the Dixie, and you can see some similarities between that run up Joe was talking in the 90s to the run up we've had now. Certainly the one in the 90s, you went from the bottom of the range to levels we're not even trading at right now, so not as big. But this has been a pretty good run up, and that 20% guesstimate, um, that's not a small thing. And you also start hearing things like, you know, uh, Mississippi has like higher income levels and a higher standard of living than like Canada's most well off provinces. No, they don't. It's the currency, right? You're also seeing like income comparisons. There's other comparisons we can run at this. So where it's not, you might have to do an educated guess in terms of how much is it overvalued, but we're at that level of an extreme, and I just think it's safe to call it an extreme when it's no longer a question of if, it's just a question of how much, and you could just kind of look at a chart and see the territory we're trading at. Uh, so it's going to come down at some point. It just needs a trigger event. Could be tariffs, like Joe's talking about. I think another factor here also, though, is how much pessimism can we, really put into the euro and the yen? I really think those currencies and those economies are getting to the point where they can just stop doing some, especially the Europeans, just stop doing some stupid stuff, not even necessarily do brilliant things. Just stop, the whole like economic policy of we're going to use cheap Russian energy and we're going to sell to a growing Chinese middle class. Yeah, yeah. Everybody knows that ain't happening. You might want to shift to something new. And I'm only half joking because you take a look at the policies, they really haven't come up with anything new or updated other than continuing to throw money at like clean energy that the Chinese are increasingly dominating and not really figuring things out. I don't think it's necessarily going to take a big shift just on that side. So I think there could be multiple triggers here. And then getting to your question, it means a lot, actually. I mean, one of the things it means is that there's a lot of good quality foreign stocks. We're not just talking emerging markets, but we'll also be talking emerging, but a lot of good quality multinationals. They're selling very cheap. They become, stocks that not just you can buy in the portfolio, but maybe even neutral or overweight. Stocks that become not just good buys, but buys that can outperform if they start getting the currency at their back. So I mean that's something we're really looking at. And a lot of times we'll talk about like valuations aren't a timing tool. This isn't a timing tool. That isn't a timing tool. The currency actually is a bit of a timing tool. This gets running. It tends to stay that way for a while, and it can be a timing tool telling you to start moving and reallocating your portfolio. So it's certainly something we look at. It can have an impact on real assets, and gold's an interesting story here too. That we've already seen gold going up, and that could be indicative of it just being a sign ahead that there could be some future weakness. But yeah, it could have a big impact on the portfolio. With our methodology, DARP, the dollar and rates paradigm, the dollar is a really big driver of what we do. So it actually might be a little difficult to overstate how important this is in terms of your portfolio weightings.
Joe, we know how to invest when the dollar's going up. We know how to invest when the dollar's going down. What are we looking for in making that shift? If in fact this pullback turns out to be more than just a momentary pullback to adjust how we're investing.
Yeah, I mean, look, right now it's just a blip. It's down from, 10, I don't know, 109, I think we went to the other day. Now we're down to 107 and change. So it's really nothing right now. But I would point to something a little bit longer term. I think it's interesting, and we'll include this chart in the video. The dollar's been trading in a range for a very, very long time. In fact, right now at 107, the dollar is up exactly from 105 in 1989. So 105 to 107 since 1989. It's gone nowhere. But in fact, it has gone somewhere. It has gone through these cycles where the low end of the range is around 70, which was as low as it's been in a long time. That was in 2008. The high was about 120, 121. That was in 2002. And those were the 121 was a peak, and the 71 essentially was the low in 2008. But we had the only bigger peak we had than that 2001 peak was in 1985 when it got up around 150, 160, actually, I think. But other than that, the dollar's trading in this wide range, and we're at the top of the range. And what I've done is I've divided it into three zones. There's the lower zone and the middle zone and the upper zone. And the middle zone is about 90 to 100. And here's the thing, good things happen when you're in the 90 to 100 range. That's kind of the neutral area. And when you're down at the low end, obviously 2008 was not very good. And so when you're down at the low end, you get problems. And by the way, when we were at the low end before in the early 90s, we also had problems. And interestingly, we had very similar problems. In the late 80s, we had a savings and loan crisis, essentially a banking crisis. And in 2008, what did we get? A banking crisis. Those come after weak dollar periods. And we can go, there's a long story about why that's true, but that is what we've seen. So now we're at the top of the range. When you have problems at the top of the range too, because that's when you get bubbles. 2001, 2000, 2001, 2002. We had all this capital coming to the United States because the dollar was strong, and we ended up with overvalued markets. Well, that's where we are now. And ultimately, this thing will come back down. And the question is, do you go back and just stay in the middle zone, or do you go all the way through the middle zone and fall into the bottom end? I don't know. We can't go that far ahead. But what I can tell you is that when you're in that upper zone, you know it's not generally going to last very long. It just can't. It causes problems not just here, but around the world. And ultimately, everybody wants the dollar to come down some, maybe except for maybe the Chinese. Other than that, I think most everybody would like to see it come down. And listen, Steve was talking about ways we can tell the dollar's overvalued and talking about Europe. Hey, maybe Europe could just do some not stupid things, just stop doing the really dumb stuff. Yeah, I don't think that sell to the Chinese middle class using Russian oil is going to work anymore. So maybe you got to adjust that. That's mostly Germany, but there are other countries that follow similar models, I suppose. I think all of Europe was kind of addicted to cheap natural gas. But what's interesting right now is that the southern half of Europe is what's performing well. Why? Tourism. Well, because look at Spain. Spain's economy is doing great. Tourism boom. Why? Well, because if you're an American and you got dollars and you go to Europe, the euro is cheap. It's cheap to go to Spain right now. It's cheap to go to Italy. It's cheap to go to Greece. It's cheap to go anywhere in Europe. But those places are the ones that are the tourist destinations, and that's where people are going. So, that's how, again, we know it's so cheap to go to Europe. And by the way, I don't know if you're a traveler. If you are, you ought to consider Japan, because holy cow, you can go to Japan on the very, very cheap. It is incredibly cheap. Dinner out in a sushi bar in Tokyo is going to cost you maybe $20. It's incredible. That's how overvalued the dollar is versus the yen. So we know these things can't last. We know that they won't. We know that they will eventually change. We don't know exactly when. And like I said, you never know what the trigger is going to be. 2000 to 2002, what was the trigger? Well, in a sense, I would say that everybody talks about the dot-com bubble, right? Oh, the dot-com bubble burst, and that's why everybody left. Everybody left the dollar. I would actually point to something else. I would point to Enron and WorldCom and the scandals that we had, the accounting scandals that we had in the early 2000s. That's the stuff that scares investors off. Having stocks run up, some little tech stock or some little bubble stock or whatever go up and bust, that's not what drives people out. That's just part of the game. But when you start messing with the accounting rules, that's a problem. And so I think that, again, our diplomacy matters, how we treat other countries and so forth. That's going to have a big impact here. And it's going to be interesting, too. We're now seeing tech stocks getting hit pretty hard today. Maybe that's starting to pop a little bit, too, the AI bubble. Anyway, and you know what? Scratch that. I don't want to call it a bubble. I don't know if it's a bubble or not. Maybe AI is going to pay off. But for right now, it does seem to be coming down a little bit on some news out of China. So we'll talk about that another day.
Lots of things to watch about the dollar, and be sure and put your comments in the section down below. And if you'd like to know how you can work with Alhambra, shoot us an email at info@alhambrapartners.com.